Welcome to this explainer. We are jumping straight into Booz Allen's Q4 and full fiscal year 2026 earnings to unpack what is, honestly, a really powerful momentum narrative. If you track the defense and gov services sector, you already know Booz Allen is a total bellwether. So today, we're looking right past the headlines, digging into their actual numbers to see exactly how they're balancing growth, some pretty massive liquidity, and a rapidly shifting tech landscape. Let's get right to it.
We've got a packed agenda for you. Section 1 is FY26 by the numbers. Section 2 will look at their growth drivers, specifically defense tech. Section 3 covers deploying capital for value. And finally, Section 4 is looking ahead to FY27.
All right, Section 1, FY26 by the numbers. Let's set the stage. To really grasp Booz Allen's current positioning, you've got to appreciate the sheer scale here. They closed out fiscal year 2026 with a massive $11.2 billion in total revenue. Boom! That's a foundational number. It just proves their absolute entrenchment in the federal and defense ecosystems. But top-line revenue is basically a look in the rearview mirror. What about the road ahead?
While looking forward, they're sitting on a staggering $38.2 billion backlog. Just think about that for a second. That is literally more than 3 times their annual revenue, already lined up and waiting in the pipeline. Plus, that backlog is up 3% year over year. In a highly complex macro environment, this gives them tremendous visibility and, frankly, a lot of revenue protection.
And all that contracted work? It's translating into some seriously robust liquidity. Booz Allen generated $951 million in free cash flow for the year. That is up from $911 million the previous year. This metric is absolutely critical because it highlights billing efficiencies and really strong collections. They aren't just winning contracts, they're efficiently turning them into cold hard cash.
Backing up all that momentum is a really solid last 12 months book-to-bill ratio of 1.1x. If you're familiar with gov contracting, you know this is kind of the ultimate health metric. A ratio over 1.0 proves they are winning new work faster than they're burning through the existing stuff. The engine is being fueled faster than it's consuming it, which is exactly what you want to see.
Now, this part is really interesting, so notice the nuance here. Q4 revenue actually dipped a little bit year over year, dropping from roughly $2.97 billion down to $2.78 billion. But look at what happened to the profitability metrics underneath. Because of disciplined cost management and tight contract execution, adjusted EPS actually went up from $161 to $178. Free cash flow jumped, and adjusted EBITDA margins expanded by 50 basis points to 11.1%. This perfectly illustrates a company prioritizing highly profitable execution over just, empty top-line calories.
Moving right along to Section 2, growth drivers, specifically defense tech.
So how are they actually hitting these highly profitable numbers? Well, behind all the spreadsheets are teams on the ground in some incredibly sensitive environments. As they point out, national security remains a primary, critical growth driver for them. With all the increasing global complexities right now, the demand for sophisticated defense solutions just isn't slowing down. And Booz Allen, they're perfectly positioned to capture it.
CEO Rossio Rozansky makes their playbook crystal clear right here. He notes that as they enter FY27, they've got momentum, they've got focus, and they are actively investing to accelerate growth. They aren't just coasting on past wins. It's a highly proactive stance. They see an opening, and they're stepping on the gas.
And where exactly is that investment cash flowing? Directly into advanced technologies, specifically cyber and defense tech. We are talking next-gen command and control, unmanned systems, heavy cyber resilience. These are absolutely not just buzzwords for them. These are their strongest growth vectors as the entire modern battlefield goes digital.
So the really crucial takeaway here is what leadership explicitly calls market bifurcation. On one side of the coin, defense and cyber are just booming. But on the flip side, the civil sector is facing some very real headwinds. They're still working through some challenging comparisons from previous years. The strategy to manage this split, it relies heavily on that rock-solid contract execution we just saw driving up margins in Q4.
Okay, let's jump into Section 3, deploying capital for value.
Knowing exactly where the growth is, how is Booz Allen actually deploying their cash to build value? Management calls it a flexible and opportunistic strategy, and you can see that beautifully balanced in their Q4 actions. On one hand, they pumped $219 million into strategic investments, funding that defense tech acceleration we just talked about. On the other hand, they handed $147 million right back to shareholders through dividends and buybacks. It's a classic dual-engine approach. Fund the future, reward the present.
If we zoom out to the entire fiscal year 2026, the numbers get even crazier. They returned a massive $837 million to shareholders overall. And the best part? They didn't have to over-leverage the company to pull it off. They maintained a very healthy net leverage ratio of 2.6x the whole time. That shows immense financial discipline.
And they're doing all of this while sitting on a massive war chest, over $2.2 billion in substantial liquidity. This gives them what everyone wants, optionality. In a fast-moving defense tech space, having over $2 billion at your disposal means you can pivot on a dime, invest organically, or snap up a strategic acquisition the exact second an opportunity strikes.
Finally, let's hit Section 4, looking ahead to FY27. So, how does all this historical performance translate into guidance? For the upcoming year, they're projecting relatively conservative, steady revenue growth of between 0 and 4%. Now, given that market bifurcation we talked about and those tough civil comparisons, this is actually a very realistic approach to the top line. They are clearly prioritizing steady footing over making unrealistic promises.
But while the top line might look a bit conservative, their profitability metrics are rock solid. They're expecting up to $1.29 billion in adjusted EBITDA. And for the bottom line, they're projecting adjusted EPS between $6 and $6.35. Now, a quick detail here. To really gauge their operational growth, they calculate a 2 to 8% EPS growth rate off a base of $590. Actually, they got that $590 base by smartly stripping out non-recurring tax benefits and unrealized venture gains from FY26. That gives us a much clearer picture of their core trajectory. Plus, they expect to keep generating strong free cash flow, somewhere between $825 and $925 million.
So I'll leave you with this question to chew on as we wrap up this explainer. Booz Allen has undeniable momentum in defense. They've got a massive backlog and a literal mountain of cash. But as management themselves pointed out, the civil market is facing real challenges. Execution in that lagging civil sector is going to be the real operational test for leadership in fiscal year 2027. So will their massive strategic tech investments be enough to offset those headwinds? That is exactly what we'll be watching for in the quarters to come. Thanks for joining me, and keep learning.